The current price of Keel Infrastructure Corp. Keel is $2.91, following a steady intraday rise of 1.04% as of Tuesday, April 21, 2026. While many retail investors scanning their Robinhood app or looking for investment help on popular investing sites see this as a penny stock play on the fringes of the tech world, the reality is far more complex. We are watching the second act of a massive corporate pivot that just finished its legal transformation earlier this month. The expectation from the market is that this is still just a Bitcoin miner with a new coat of paint, but the reality is that the company has effectively re-domiciled to the United States to capture the massive spillover from the AI data center boom. When you look at Nvidia stock or Apple stock, you are seeing the brains of the AI movement, but companies like Keel are positioning themselves to be the skeleton. Most people see the recent rebrand from Bitfarms to Keel Infrastructure as a cosmetic change to chase a trend. However, the move to become a Delaware corporation and shift the headquarters to New York City was a deliberate tactical strike to access deeper pools of capital and lower the cost of project financing. If you are doing self-investing or managing a Schwab Intelligent portfolio, you've likely noticed that the old crypto mining narrative has lost some of its shine. The real alpha is now in who can provide the megawatts and the cooling systems for the next generation of high-performance computing. The intraday movement today reflects a growing confidence from institutional desks on Interactive Brokers and Fidelity Brokerage. We're seeing a distinct shift in trading volume where the crypto correlation is beginning to decouple. In previous years, a dip in the price of digital assets would have sent this ticker into a tailspin. Now, because of the commitment to liquid-cooled infrastructure and the potential for Nvidia stock-based hardware deployments at their Panther Creek site, the market is starting to treat Keel more like an energy infrastructure play. This is the curiosity loop. The market expects a volatile miner, but reality is revealing a disciplined infrastructure firm with over $500 million in liquidity as of their last report. For those of you using SoFi Invest or the Fidelity mobile app to track the sector, the daily swings in Keel have become a battleground between short sellers who think the AI pivot is a bluff and long-term accumulators who see a massive arbitrage opportunity. The institutional activity we're seeing suggests that large funds are no longer just looking at the hashing power. They are looking at the 12-month outlook for site development in Washington and Pennsylvania. The expectation was that Keel would struggle to fund these massive data center conversions. The reality is they've already secured $300 million in project financing to accelerate these builds. When reality beats expectation in the middle of a rebranding cycle, that is usually where the most significant price discovery happens. Let's get into the weeds of the business model, because that's where the authority of this analysis lives. Keel Infrastructure is essentially taking the waste of the crypto era, the power contracts and the physical land, and turning them into the gold of the AI era, data center capacity. They are targeting the deployment of advanced liquid cooling to support systems like the NVIDIA GB300. This is a massive jump in complexity from traditional air-cooled Bitcoin mining. If you are managing your own online investing through Fidelity Investments or SoFi Active Investing, you have to ask, can a former mining team handle the uptime requirements of enterprise AI? The market says maybe, but the recent hiring of U.S. industry experts suggests the company is betting its survival on yes. Before we go further, I want to hear your perspective on this shift. Comment below how many shares of Keel or other infrastructure plays you currently hold in your individual brokerage account. Do you think a former Bitcoin miner can truly compete with the established data center giants like Equinix or Digital Realty? If we look at the macroeconomic pressures, Keel is operating in a unique niche. High interest rates usually crush infrastructure companies, but because Keel has maintained a relatively clean balance sheet compared to its peers, they have the dry powder to build while others are deleveraging. This is why you see Fidelity Wealth Management and other major players keeping an eye on these smaller, agile operators. They aren't just looking for the next Tesla stock. They are looking for the companies that provide the foundational power for the entire ecosystem to function. The trading volumes recently have been fascinating. We've seen a pattern of staircase buying, where the stock pushes higher in the morning, consolidates, and then finishes near the highs. This often indicates institutional accumulation rather than retail speculation on a Robinhood stock trading platform. When the big money buys, they don't do it all at once. They bleed it in throughout the day to avoid moving the price too much. If you are investing online using Fidelity IRAs or SoFi ETFs, these are the technical signals that should be on your radar. Now, let's talk about the risks, because the reality isn't all sunshine and high margins. The current reality is that Keel is still bleeding cash. Their free cash flow is significantly negative as they pour every dollar into these new data centers. The expectation is that the revenue from AI will start to offset the losses by late 2026. If those timelines slip, and infrastructure projects often do, the market will be unforgiving. This is a high-stakes game of timing. If you are using online investment tools or Robinhood investments, you have to be comfortable with a high beta. This stock moves much faster than the S&P 500, and it requires a stomach for volatility.
Looking toward the future outlook, the catalyst everyone is waiting for is the energization of the Panther Creek campus. This is the moment the narrative officially shifts from future plans to active revenue. The market is currently pricing a buy rating with a target around $3, but that target is arguably conservative if they can prove their ability to host high compute workloads successfully. The expectation is that they are just another AI chaser. The reality might be that they are one of the few companies with the actual power permits and physical space to meet the surging demand for domestic data centers. As we reach the final stretch of this analysis, it's important to reinforce the contrast between expectation and reality. The market expects a company in transition to be messy, and the financials certainly reflect that, but the reality of their liquidity position and the strategic redomiciliation to the US gives them a foundation that most small-cap tech firms lack. Whether you are using Fidelity Trading Platform, Interactive Brokers account, or Robinhood Crypto, you have to recognize that Keel is no longer a crypto company. It is an infrastructure company that happened to start in crypto. In summary, the central insight today is that Keel Infrastructure is currently in a valuation gap. The market is still looking in the rearview mirror at the Bitfarms history, while the company is driving toward a future of enterprise-grade AI hosting. We've seen the institutional accumulation, the strategic hiring, and the massive pivot in project financing. The movement we're seeing today at $2.91 is just one data point in a much larger story of corporate reinvention. Stay focused on the development milestones in Pennsylvania and Washington. Those will be the true indicators of whether this pivot is a masterstroke or a desperate move. Keep your eye on the tape, manage your risk on SoFi Trading Platform or Fidelity ETFs, and always look for the reality that the broader market is too distracted to see. This is how you stay ahead in an environment that moves at the speed of light. Keep your portfolio balanced, stay critical of the hype, and remember that in the world of infrastructure, the one who controls the power and the cooling usually holds the keys to the kingdom. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.